Yeah, I mean, look, they admit they missed it. This concern that we had about second half of 2020 growth slowdown was incorrect, they say. And since our downgrade, the stock is up 192%.
This analyst has clearly been out to lunch, which ultimately begs the question, can you put a lot of stock in what he's calling out now with regards to hitting 20 million potential vehicle sales for Tesla?
$780 price target is a street high, as you guys have been pointing out. And just to put it in perspective, the average analyst target price currently monitored by analysts over at FactSet is $406. So just to give you an idea of just how much Tesla has run up.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So today I'm reacting to some more of the mainstream finance media's coverage of Tesla's stock upgrade from Goldman Sachs to a street high $780 per share. The name Goldman Sachs carries with it a reasonable amount of weight within Wall Street, so it's fascinating to watch the mixed responses to this upgrade. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Welcome back. Shares of Tesla upgraded to a buy today, a new street high price target, $780 at Goldman Sachs. They see a shift towards EVs happening faster than expected. You wouldn't. What a shock, John Najarian. You own calls.
What a shock.
Can you believe that's the reason why they upgraded the stock, John?
Well, Scott, you'd be grasping for reasons at why they hadn't done it earlier, of course. But now this is a great move by Goldman. It's a recognition of what Elon Musk has actually done in terms of deliveries. So I continue to own it. I own the upside calls, and it's just been a great ride. I don't intend on getting out of this one, Scott.
Does any sane person intend on getting out of Tesla stock?
Yeah, I mean, look, they admit they missed it. This concern that we had about second half of 2020 growth slowdown was incorrect, they say. And since our downgrade, the stock is up 192%.
Ouch.
Shares of Tesla up 3% today. That means the market cap of the company $556 billion as it prepares to enter the S&P 500 on December 21st. Goldman Sachs is raising its rating on the company. That happened after the close yesterday. Mark Delaney is the analyst there. He raised his rating to buy from neutral. The price target is $780, which is the highest on Wall Street right now. And he basically said the shift toward battery electric vehicle adoption is accelerating, will occur faster than our prior view. What's also interesting is that he talked about not just the cars for Tesla, but the other stuff that Tesla does. I mean, we never talk about Solar City anymore, but it got wrapped back into Tesla. So it's interesting that he highlights that as a potential growth opportunity as well. Miles, you know, I don't know what Tesla could do wrong at this point that would dissuade people.
Yeah, you know, it's funny you mentioned the note having comments on the other stuff that Tesla does. We're all old enough here to remember when the other stuff was the main thing to be excited about, and that wasn't as exciting a story. Now we're going back to they sell a lot of cars. I think it's interesting to see a projection out to 2040 from Goldman, 15 million cars a year by 2040.
This is a good point here. The fact that most Wall Street analysts in their research aren't projecting Tesla sales out beyond tomorrow is kind of moronic, but also why many of them are completely missing the mark on this company. Now, if any Wall Street analysts happen to be watching and you're not so offended from yesterday's video and didn't cry yourself to sleep last night, one more tip for you. One very obnoxious, arrogant, but important tip. If you are not modeling Tesla sales out to at least 2030 and beyond, you shouldn't have a job.
Sure. I mean, you know, why not at this point? I think it's such an interesting story on a number of levels. And the level we're looking at Tesla on today is how do analysts make sense of a stock? They get a lot of questions on a stock that the street, some analysts have not been very right on the stock.
If by some analysts you mean the vast, overwhelming, embarrassing majority, sure.
Other analysts have been very right and are even more bulled up the higher the stock goes, but it's an emotional name, Brian Salzi.
Now, I may be reading into things just a tad too much, but let me know in the comments below. Does anyone else get the feeling that the host here is having a little bit of a dig at old Salty McSultan?
But it's an emotional name, Brian Salzi. Everyone has an opinion. Everyone has to have an opinion, it seems, on Tesla. And so I think to see a shop like Goldman come out and basically throw up the white flag on this thing at this point in time, right, as it's about to be included in the S&P. And as Julie said, I mean, consensus is what could go wrong, Salzi, but that always kind of puts up your spidey sense, right? Maybe something will.
Well, Miles, listen, I know all the Tesla bulls out there on Twitter that love to tweet negative things to me. They're cheerleading this. They love this call. They see Tesla selling 20, 30, 40 million cars by 2050. That's all fine and good. It's Goldman Sachs. They're going to cheerlead this. But can we just focus on the rating here? Neutral rating? Tesla has been, over 600% this year. And Miles, we've had these discussions in the past. As a stock analyst, you're paid big money, especially if you're working at Goldman Sachs, to make big calls or just get it right in some form.
I'm detecting elevated levels of sodium in the air, but Brian does have a point. These analysts are paid the big bucks, and the idea is that they, generally speaking, should be competent. And let's be honest, vast majority of Wall Street has completely missed the mark on Tesla stock thus far.
This analyst has clearly been out to lunch, which ultimately begs the question, can you put a lot of stock in what he's calling out now with regards to hitting 20 million potential vehicle sales for Tesla?
Alright, so let me try to understand the mental gymnastics being performed by Salty McSultan over here. I'm getting the impression that the general attempt to discredit this analyst is, well, you were wrong in the past, therefore you must be wrong today. Now, this has some point to it, but here's the thing. If you're consistently wrong, and then you come out and say, hey guys, I was actually completely wrong about this, and this, and here's what I believe now about this, and this, and here's why I was wrong, and I've reversed my position, here's all the evidence, here's what I think now. Is that analyst even slightly more credible than the analyst who still has a sell rating on Tesla stock, has for the last 3 years, and continues to bang their head against the wall, hasn't changed their thesis despite the changing evidence? Now, maybe I'm going out on a limb here, maybe I'm sort of overstepping my bounds, but I have a feeling that Brian's attempt to discredit this analyst is kind of almost like a no-lose situation. See, he can just say, well, every analyst who upgrades a stock now is a moron and you can't trust them because they were wrong in the past as well. Now, there is something to this, but the point I'm trying to make is there's levels of credibility here, and attempting to discredit an analyst who has finally seen the light on Tesla stock, probably not the best approach. Much better to discredit an analyst who's still completely wrong rather than the analyst who's gone, oh, I was wrong, here's why I was wrong, and here's what's changed.
I think this note happens to disregard some of the competition this company's going to see over the next 5, 10, 15, 20 years from very more established automakers, Ford, General Motors, you name it.
Oh, I forgot. The competition is coming. Man, I'm such a moron. I'm so sorry, guys. I just keep forgetting that the likes of Ford and GM actually have a very good chance of competing with Tesla. You know, their software prowess, their brilliant engineers, their incredible leadership, their pace of innovation, their track record of execution. Yeah, thanks for letting me know that, Brian. You wouldn't happen to be long any legacy automakers, would you, my friend? Just curious. Seems to create a bit of a distortion field in people's ability to perceive Tesla. If they own a bit of Ford, a bit of GM, it's almost like they're incapable of actually seeing Tesla for what it is. Now, hey, pure speculation here, but I've got a funny feeling that maybe Brian's got a bit of oil in the portfolio, maybe a bit of legacy auto, or maybe he's just a little uncomfortable, scared, and unsettled by the fact that Tesla doesn't fit into the little box that it's supposed to.
I mean, at the same time, when a company's price action, can at times be so divorced from fundamentals and is really more of a sentiment stock, to be fair, it's hard to predict how something like that is going to do. I mean, it's really that X factor that is difficult to analyze, kind of to Miles's point about trying to get your hands around a stock like this.
While I do understand where she's coming from here, we have to be fair to the likes of Cathie Wood of ARK Invest, one of the few people who actually did the work, actually engaged her brain, actually understood the opportunity, actually comprehended what was going on, and actually nailed it in terms of the Tesla stock price target. It's not that Tesla the company is intrinsically difficult to understand. Far from it. In fact, the reason that the majority of Wall Street analysts have made mistakes in terms of understanding Tesla isn't because it's a difficult thing to do. It's because a bit of hubris, a bit of arrogance, a little bit of laziness leads most analysts to look at Tesla and go, "Oh, their products have wheels. They must be an automaker. The end. I don't need to think anymore. It hurts. I don't need those principles. No, they're a car maker and I don't understand. Stock's overvalued. Sell."
$780 price target is a street high, as you guys have been pointing out. And just to put it in perspective, the average analyst target price currently monitored by analysts over at FactSet is $406. So just to give you an idea of just how much Tesla has run up. But take a look at some of the driving forces behind that Goldman upgrade. First of all, they are talking about the battery adoption side of things accelerating. That's a key point for that upgrade and that move to $780. Also, their energy and self-driving business, positive catalyst there. And a big key one there, margin expansion expected in the future as well. So that's the Goldman call on Tesla. It's not the only notable call we've seen. There have been a lot of bullish commentary coming out of these particular analysts, again, on Tesla. Adam Jonas, back on November 18th over at Morgan Stanley, said Tesla is on the verge of a profound model shift from selling cars to generating high-margin recurring software and services revenue.
I have to say, I'm really happy to hear Morgan Stanley actually starting to really detail and describe the core of Tesla's business and the future of the company, recognizing the software as a service. This is important. I think we'll see more firms coming out with upgrades over the coming months and years with the same kind of comments, recognizing that Tesla's margin is going to expand enormously over time as software becomes a bigger piece of the overall pie.
Overweight rating at Morgan Stanley. The next one, a little earlier on, Alexander Potter over, Piper Sandler on October 21st. After solid execution in the third quarter, Tesla still deserves a must-own status. So positive commentary there.
Speaking of Alex Potter from Piper Sandler, I have to say, give credit where it's due, one of the most competent and correct analysts on Wall Street. I mean, let's bring up the tipranks.com profile just to have a look. Absolutely slaying it. Oh, and I did it again, man. I always do this. I'm so sorry. Actually, that reminds me of a joke. Ready, guys? Sit down for this one. It's hilarious, okay? Ready? Ready? Okay. Gordon Johnson. Just to be clear, I am referring to Gordon's research, not the person. I mean, I've never met the guy, but his research regarding Tesla, beyond embarrassing. Let's leave it at that. Meanwhile, for contrast, Alex Potter's profile on tipranks.com on the opposite end of the spectrum of competence.
And then to kind of round it out with something a little bit more negative, this is Rajvindra Gill over at Needham, basically on October 12th saying, we've never seen a stock rise that much, that fast with such little regard to past fundamentals.
Past fundamentals, I see. So we're now looking in the rear view mirror as a guide to what's likely to happen in the future. Seems rather intelligent, doesn't it? I mean, it's not like you want to be looking forward and trying to understand what's happening in the future. No. Certainly not. Don't keep your eyes on the road. No, look in the rearview mirror. That's really going to be helpful, isn't it? But I guess if this is a lens through which we're analyzing things, then let's have a look at this guy's past performance on, say, Tesla stock. Oh, right. So a sell rating on Tesla stock for the entirety of the last 18 months. Slow clap for the analyst here on Tesla.
If you're looking for a little bit of balance with regard to the views. Now, again, to start the year, Tesla was roughly a $75 billion company. Back here, $75 billion, and we just showed you near a $550 billion market caps now. And just to put some of that in perspective, if you look at the biggest companies in the S&P 500, which Tesla will be at one point in just the next few weeks, you take a look at Apple, you take a look at, say, Microsoft, you take a look at Amazon, those particular moves there, to put it in context, Apple, $2.1 trillion, Microsoft, $1.6 trillion, Amazon, $1.6 trillion, Tesla would be roughly the number 6 stock in the S&P 500 if it were to go in today. So, Carl, an interesting look at that big Goldman call. There could be more upside ahead if anything happens here with some of these big calls. But still, caution abounds when it comes to a stock that's run that fast. Remember, Carl, $75 billion was the market value to end last year. $550 billion now. It's been a huge ride.
Certainly has been a huge ride for Tesla stock. Long overdue in my opinion. And with a long-term investment horizon, 10 plus years, I think this ride is just getting started. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.